Thank you all for coming. I suspect we'll have some other folks joining us. I'm Dan Rundy. I hold the Schreier Chair here at CSIS, and really appreciate my colleague Kimberly Flowers, who runs our food security program, for co-moderating this with me. We've had a really interesting program that we're going to be talking about today. We're going to be talking about African Risk Capacity, which is a specialized agency of the African Union. I think one of the things that we need to be thinking about is how we use modern financial instruments to support governments to deal with all sorts of global challenges, whether it's drought or whether it's even things like pandemics. Obviously, the concept of insurance, similar to tax systems, isn't the most scintillating and most sexy of topics, and people's eyes sometimes glaze over at this, but they're really quite important. We did an important report on tax systems last year, and so if you have trouble sleeping at night, I encourage you to read my tax systems or domestic resource mobilization report, but it's really quite important. In a similar way, concepts like insurance and reinsurance and thinking about using modern financial instruments for these global challenges is something that hasn't been fully utilized, whether it's in pandemics or whether it's in issues like food security. So I think this is an important and welcome innovation. So I think we're going to have a very interesting discussion today. The conversation we're going to have is on the record. We have two very interesting speakers. We have Lars Thunell, who's the former CEO of the International Finance Corporation, who's the chairman of ARC, and then we have Mr. Simon Young, who's the CEO of ARC. But without further ado, I'm going to hand over the floor to my friend and colleague and office neighbor, Kimberly Flowers, to talk a little bit about how she sees this conversation from a food security perspective. Thanks for being here, Kimberly.
Thanks, Dan. Thanks for the invitation to join this. So my name is Kimberly Flowers, and I'm the Director of Global Food Security here at CSIS. Fairly new. I've only been on board a few months, and I'll just take a moment to share with you what we're doing with the Global Food Security Project. Overall, our mandate is to look at how we can best sustain and strengthen U.S. government investment in addressing the root causes of hunger and poverty, and that means looking at agricultural production and nutrition interventions. More specifically, we're looking at President Obama's efforts in the last 5 years, since the U.S. government has really renewed the way that they're looking at working, particularly with smallholder farmers. And we'll be providing policy recommendations to the next administration on what Feed the Future 2.0 could look like. Other ways that we're working on global food security is examining and highlighting global food insecurity issues and how they relate back to U.S. strategic interests. You know, Feed the Future, if you're unfamiliar with that, it has 19 focus countries around the world, 12 of which are in Sub-Saharan Africa. So Africa is a special focus of the U.S. government and their interests, as well as, quite frankly, my own. On a personal note, I spent a number of years living in East Africa, and in fact, I just got back from Tanzania, where I was at last month, looking at the effectiveness of Feed the Future. We'll be doing a report in probably early November as a number of case studies, but Tanzania is the first one. And, you know, when you look at some of the issues that are affecting smallholder farmers today, climate change is a big one. Any sort of disaster on any level has a huge impact, and they really don't have the capacity to bounce back. Whether it's house climate change seasons or drought or crops in general, smallholder farmers need more support to come back from those issues. I also think it's important to look at things like conflict or disease, Ebola, the outbreak, how that affected farmers, as well as you look at conflict like in South Sudan, how that affects a country where 90 to 95% of the country is their livelihoods depend on agriculture. So I'm really looking forward to today's conversation and engaging everyone in this room as we talk about ways that we can best support Africa in general. Thank you.
Thank you. Lars, the floor is yours. Thanks for being here. It's nice to see you.
Thank you very much, and thank you for the invitation to come here, and thank you all for coming here this morning. I was contacted by Ngozi Okonjo-Iweala in 2013 and asked whether I wanted to engage myself in something called the Africa Risk Capacity. And when I heard about it, I thought this is a great opportunity to actually use modern instruments. It's a true public-private partnership. The idea came out of the World Food Program, where some people have been working on how can we actually be more prepared? How can we get out faster with the help? How can we do it in a way so that we don't only have to wait until the cameras has been there and you got pledging conferences and it takes 18 months to get the money out there. Because studies have shown that if you can get money to the small farmer within 4 months or so, the cost is much lower, because after that time the farmer would have slaughtered the last cow or eat the seed of next year or something. So that was the idea, and the idea was to use the international reinsurance markets and also increase the preparedness. So an African Union agency was established back in the fall of 2012. I got involved in the spring of 2013, and the company, Africa Risk Capacity Limited, was established, I think it was early 2014. And the idea is basically that and this company, I should say, is kind of a mutual or hybrid mutual insurance company owned by the African states. And DFID and KFW came in with $200 million in capital, recallable capital or repayable capital. We have to repay it after 20 years with no interest. It's a new instrument that they have developed to support instruments like this. And last year we got started, 4 countries. We had Kenya, we had Mauritania, Senegal, and Niger. And the company insured about 35 million worth of or 55 million worth of coverage, and we've got premiums paid, and premiums are paid are based on market prices, and these 4 countries paid in about 17 million. There was then a drought in West Africa, so we actually had to pay out, and we paid out about $26 million to these 3 countries. Kenya was basically okay, and that helped about 1.3 million people who got some help through this, and helped save about 700,000 livestock. And we got it out quicker. And studies have shown that this type of system is about 4.5 times as effective in terms of money as if you have to wait for the pledging conferences. So that is as usual, that if you can deal with prevention, it's so much more effective than actually dealing with the issue after it has happened. And that goes across, as you well know, basically everything. And now we're looking at, for this year, we have 5 new countries: Burkina Faso, Malawi, Mali, the Gambia, and Zimbabwe. And that will be a total coverage of close to $200 million and in premiums, and 26 million in premiums. We have reinsured ourselves. I said we had payouts of 26. The reinsurance market paid up for a big part of that. We have 8 of the biggest reinsurance companies that has actually helped us, supported us, but again at market rates. And the company, I should mention that ARC Limited is incorporated in Bermuda. We would like to move it to Africa, but there's really no country yet who has either the legal framework or the support services that a company like ours need. But the intention is, as soon as any country can offer that, we'll move. To become a member of and buy a policy from ARC Limited, the countries have to show that they have a plan for how to get the money from the government out to the small farmers or the families in need. And that could be different ways. It could be seed that's being distributed or food of some type through some schooling programs. It could be cash. And we're looking and trying now to evaluate which, are the most cost-effective ways of doing that. And we are now also looking at taking this technology, this modeling that Simon Yang, who we will hear in a few minutes, started to develop relating to the Caribbean, but is now has taken further with ARC. We're applying that now also to cyclones. So in the end of this year, we hope to introduce cyclone insurance for the East Africa and the islands. And we're also looking at flood insurance and hope to introduce that next year. We're modeling that right now. And we're even talking about doing some type of pandemic index insurance, because with all Ebola, we've seen how that is. And again, you see the thing that it takes such a long time to get money. And with a thing like a pandemic, you need to get out there early and start stopping it and have money for it. The very exciting thing that happened in the summer was that the G7 identified ARC as a kind of a model for the future, a mechanism that could be used, and so they picked it up and said, "Hey, and this was in their communique from Elma, that we think that this type of insurance should be expanded dramatically over the next couple of years." So they suggested on a global basis that by 2020, 400 million people should be covered by these type of insurance, of which they thought that Africa would be about 160, 180 million, and ARC would be the major part of that. So right now we're working very, very hard with the whole team to try to get a plan together for Paris, where we can present the ideas, and that's one of the reasons why we also want to talk about it, because we want to make people aware of the whole concept, its potential, and also prepare, because nothing comes for free. Some of the support that we need for to be able to develop these things. Maybe Simon, you want to talk a little bit more about the specific model and some of the things I've forgotten?
Sure, thanks very much, Lars, and thanks again to Dan and Kimberly and CSIS for hosting us, and for all of you for coming out this morning. Lars has covered most of the main points. I've come in from, I guess, more of a technical side, and I was involved in the development of the Caribbean Catastrophe Risk Program under the World Bank's leadership in about 10 years ago. And through that, we learned a lot of lessons about how insurance tools could be important in managing natural disasters, and how, in doing that, we really get a linkage between humanitarian response and development. And I think that especially this year with the Financing for Development Conference in Addis, with the Sustainable Development Goals event this coming weekend, and moving into Lima and COP21, that's really a very, very prevalent theme across all of those gatherings, is that humanitarian response and development are intimately linked. And the Sustainable Development Goals talk to country engagement and country leadership in meeting those goals, but a substantial part of that is addressing humanitarian needs. And so the humanitarian summit next year, early in May next year, is also part of this conversation. And so what we're doing is really addressing both of those spaces, I think, through innovative mechanisms. And if there's one thing that the ARC is really demonstrating is fundamental, and that's linking contingency planning, preparation at the country level to the funding flows, financial flows from these insurance mechanisms. It's not something we tried in the Caribbean. We didn't think it was necessary there, but in Africa it's absolutely necessary. And that really is the clincher which makes this a great program. The countries have to tell us how they're using their payouts. And then we audit them on that, and if they don't do it properly, then we have the right to claw back that payout or suspend them from the program. So there's some pretty tough sticks that we can use. But the carrot for them is that they have much more control over their humanitarian response and therefore underpinning their development goals. And we think that bringing the countries into the process is a really big step forward. One of the other things that I'll just mention quickly is that we're aware of the potential impacts of climate change on programs like this. We don't know exactly where those changes, what climate change is going to do to the insurance portfolio, where it's going to affect, what those effects will be. But we want to put in place something that will protect the countries who are participating in the insurance program from the bigger effects of climate change. So we've developed what we're calling the Extreme Climate Facility. It's in the R&D phase right now, but what we want to do is, again, tap into the global capital markets through a catastrophe bond type instrument to cover countries and generate flows for adaptation as and when there is quantifiable change to the climate such that it's impacting on the insurance program itself and also the underpinning development programs that the country has in place. We've demonstrated from past data from the 60s, actually from the 1930s through to the present, that climate switches can more than double the insurance premium for the same coverage that the country might have to pay under ARC's program. So this is a tangible quantification of the potential impact of climate change, and it's demonstrable in the Sahel region for the last 100 years. So that's the kind of thing that we're aiming to kind of guarantee to help the countries get past a doubling of a premium. And as Lars said, it's a market premium that we're charging here. This isn't a donor grant program. This is market cost. We're making it very cost effective because we're pooling risk across Africa, and it's a mutual insurance company. But ultimately, they're paying a market rate for their insurance coverage, but that market rate under climate change may well have to get a lot higher. So we want to help them to protect against that, and we'll be asking donors, Annex 1 countries, to contribute towards that. But it's going to be a quantifiable change that we're going to be looking for before those funding flows arrive. One last thing, the software we've developed, Africa Risk View, it covers drought right now. It both monitors rainfall and gives some forecasting capability as well as underpinning these parametric insurance programs. And we're adding, as Lars said, tropical cyclone and flooding. But another great innovation that we're working on and we'll be announcing very soon and moving forward is licensing that software, that capability back to the private sector so that they can take on more risk, more weather risk in Africa. It's not very easy for the big reinsurance companies, the big insurance companies, the global insurance companies to cover weather risk in Africa. It's fairly poorly defined generally. But through this software and these parametric insurance mechanisms, we can actually put together portfolios which the market will take risk on. And that's really quite critical because that will then help us to reach further and further down the supply chains to the individual farmers who are ultimately supplying the supermarkets of Europe and the US and many, many other forms of commerce which the African farmers and other rural population are contributing to. So we think that that's really an important development as well, which is kind of cool, having developed the software with public money for a public purpose to then be able to loop it back into the commercial markets.
I should have said that we are using satellite technology to actually measure it, and we have squares of every 10 kilometers in Africa where you can actually start to see and have developed through different means a whole database of statistics going back many, many years, different for different regions. So that is in itself a unique thing. I mentioned that we're looking for things from donors and the G7. What we need now is money to actually continue to develop our models, product development. We need money to help train the countries in their plans and develop their plans for actually distributing the money as they come on. We think we can accelerate getting more companies or countries on to this scheme by having donors paying part for a while in the startup phase some of the premium. Right now they're paying basically themselves. We think we can also line up with other organizations like the World Food Program and others who could kind of use the same system and even double up the insurance and you get the coordination across. And finally, you heard the Extreme Climate Facility, which in itself is a very good way of whether it's insured money or funds coming just in response. You can actually see who is being affected by the changing weather over time. So I think we stop there and open up for discussion.
Good. I have a couple questions. Thank you for this. This is great. We've got some very thoughtful people in the audience, so I think this will be a really interesting conversation. Can you just, what sort of, if you're going to Paris soon, and what would be a successful outcome for you guys? Like what would be a successful number? What would you like to see if the donors give? And related to that, in addition to the G7, are you talking to countries like China as well as potential donors for this?
I'll let Simon answer some of it, but we're right now just in the process of developing the business plan, so I don't have any exact number for what we're looking for, and I think that's also a question of how ambitious does the G7 want us to be. But obviously we would like to bring in as many donors of various types and also get the private sector. I think one of the things is that we are on the right between the public sector and the private sector and having them involved and starting. That's why we also have the idea with licensing our technology. It's not only to get money, but actually I'm sure that they will then help to improve. It's like the open source software in the software industry. And having them start to further develop the concepts and ideas, and that in itself would have. But Simon, do you?
Yeah, I mean, in direct response to the G7, and for those of you who are not aware, the G7 pledged to bring climate risk insurance to an additional 400 million people globally by 2020. And behind the scenes, they are relying on Africa to produce half of that number and ARC to do most of that. So effectively scaling up to probably 160 plus million people directly or indirectly covered by 2020. And to do that, as Lars mentioned, we need three main areas of support, I would say. One is for just the country interaction, the client management, getting people on board, the software development, carrying on innovating there, making sure we're at the forefront and that the countries understand the technology and are using it appropriately. The premium financing, a lot of these countries have multiple hazards. It's not just drought. Some of them, drought and flood, tropical cyclone and drought. So for those countries and the poorest of the countries, it's a struggle to get that premium embedded in their budgets. It's not something they felt that they needed to pay for before. A way of doing that, which has been used in other schemes like this, is to subsidize premium for a time, gradually wind that down as the budget, it gets embedded in the budget. And then this replica coverage, what we're calling this, bringing the main humanitarian actors in to effectively leverage the infrastructure that we're building, both in the contingency planning and in the insurance tools, to speed up the humanitarian financing flow. So we think that if a WFP, for example, just matched the coverage that the countries were getting, then that would immediately double the funding flow, which is coming earlier and more efficiently than currently the humanitarian response system is able to deliver. In terms of G7, we're concentrating on a G7, and our German friends are being very supportive of that, having chaired the ELMO and chaired the G7 and transitioning to the Japanese now for next year, and they're going to be picking that up too. But certainly very interested in discussing with others. We have not discussed directly with the Chinese as of yet, but certainly we would like to do that, and others who are very very keen to get involved in development in Africa, which this is really underpinning, I think.
Just a couple more things, and then I'm sure Kimberly, you'll have some thoughts too. But just in terms of, you do imagine a scenario where in a number of countries, as this product becomes a normal part of doing business for these governments, that they'll pick up the tab over time, or in many countries, you do see that as okay, that's good. Absolutely. Yeah.
And today, most of them are picking up the tab already. In the existing, it's just to accelerate the program and get even more countries in.
So this is sort of a one-time ask of the G7. This isn't like an ongoing. This is like, if you do this, we're going to cover these folks, and they're going to pick up the tab over time. 5 or 7 years from now, we're not going to be coming back passing the hat again for X millions of dollars to do that.
Exactly, and I think the rationale especially is we don't want to just 2020 meet that number and then the following year it drop right off.
Right.
So we want to get it embedded in these government budgetary systems, and preferably their legal systems as well, so that they have a legal responsibility to take these kind of actions. And that's been done in Colombia, in Peru, in Mexico. There are laws that are in place which require budgets for these kind of things. So.
Okay. Just one more question. I'm a very literal person, and I'm not sure everyone here knows a lot about insurance or reinsurance. So let's just walk through a scenario. So let's say I'm XYZ country in Africa. I have signed on to the ARC program. I've trained my government folks. I've got a network. There is a drought. What happened? I'm paying my premiums. I have a car insurance product, and there's an accident, and I've been paying my premiums every year, and I get X number. There's an accident, I get paid back. How does ARC's program work? And have you paid out anything so far?
Yes, as I said, we paid out about $27 million last year to these 3 countries. And what happens is that they would come to us, or we would look at our models and the measurement systems. You would see that it has not rained enough. You're meeting that point, that trigger that we have agreed upon on what defines a drought together. And when you get that trigger point, and then we have agreed how much ARC should pay to them, ARC pays out. At the same time, we go back to our reinsurers and say, hey, because we have a backup program with them that is using the same triggers, and say, you have now to pay up. So they paid, of the 27, they paid out about 17, I think it was, $million last year.
All right, so I was just kidding. I do have one more question. So just epidemics. So with pandemics, I just came from a conference last week at Texas A&M at the Bush School that Andrew Natsios put on, looking at global pandemic preparedness. So if you look at, you could have, if Ebola had gone airborne, which is the technical term for if it had been airborne transmission, or that you could have had as many deaths globally as you had in the 1918 flu, which was 50 million people. That wasn't what happened. And at one point, CDC had 4 different scenarios. They had a 5th one, which was that one. They took it off. The 4th scenario is 1.4 million. We did not have that. We had terribly and tragically 11,000 deaths and 30,000 infected, mainly in West Africa. So let's talk about an Ebola situation. You guys are trying to develop a pandemic. So let's say, what are the metrics for when, because I think this is the same issue with droughts, which is, okay, we have a global pandemic. The global system goes and passes the hat, the WHO or the USAID or the World Bank Group or African Development Bank, and they're sort of 6, 8, 12 weeks behind the geometric expansion of the pandemic numbers, right? Because I think that's what it is. So then we have cases where, and this isn't a criticism of the administration, this would have been any administration, where you had lots of beds because we needed beds, and then there's stories in the New York Times about, well, the beds arrived late or they're empty, these sorts of things. Right? And so this could have been the World Bank Group, could have been African Development Bank, could have been any administration. So what I think what I understand is, okay, you hit some metric of so many people infected, and we give you, instead of passing the hat and taking 12 weeks, you get the cash immediately. Is that basically how it works?
So yeah, and just to, we're working on something which ARC's mandate was kind of expanded beyond from climate risks to include pandemics by the Ministers of Finance of the African Union at the beginning of last year. So, so we're working on this. The bank and others are also working on speeding up that finance flow. But I think the critical piece that we can bring, using the experience that we've developed for drought, is tying those early funding flows, as you said, hopefully a few infections, although it's very difficult to measure a few infections, but hopefully a very low numbers of infections to fund pre-agreed plans at the country level. And so that will take infrastructure development on the ground for sure, and us working with ministries of health instead of ministries of agriculture. But we think the same principles can be applied, and this would be very early country-driven response. It would still need that international response. But if you can, we think the value of acting earlier is the multiplier is even higher, we think, for pandemics than it is for drought at 4.5, at least 4.5 to 1. It could be 10, 20 to 1. We don't. It's very difficult to say, but we're working on that. And there's actually an event going on right now, yesterday and today, at the bank, which is again discussing the potential financing mechanisms. So, yeah, we're very interested in seeing how far we can mirror what we're doing for drought.
I'm thrilled that you have both extreme climate change and pandemics on your horizon. My question is, when this is a real partnership, and you're putting a lot of trust in these governments, and so you've mentioned both the right to suspend funds or some capacity building, but I'd like you to elaborate on that a little bit more. If it's the government's responsibility to get this out to farmers in whatever form that is, which is also be interesting to look at, which you mentioned. But what more precisely and more detail are you doing to build up the capacity to deal with corruption, especially in some of the countries you're looking at, like Zimbabwe? What things do you have in place to either pull back or to build up the capacity of the governments to make this work?
Well, I start, and then Simon can fill in. I think, first of all, the plans that are developed has to go through a peer review. So the various countries have to look at each other, and they have to present. And we actually last year, I think we declined one country because they didn't have a plan. They were not. One country was declined. They couldn't insure themselves because they didn't have a good plan that had a quality that we thought it should have. We're now looking at the possibility of actually having external certification of the plans, because that would give it even more of teeth as we go through, and I kind of have an objective organization kind of looking at it. The other thing is, as I think Simon mentioned, we also do audits of the plans and what happened to the money afterwards, and we have a possibility of clawing back that. So I think those are some of the things, but it's and we're also looking, I should say, in certain countries of involving also some NGOs in the system when we think that may be a better way than the government. But why don't you add?
And just to add quickly to that, there's a lot of work being done on cash transfer and scaling up social safety nets in response to these kind of situations. And for us, that would be a great mechanism. If these funding flows were going to support that and coordinated with that, and we're looking at that, and actually that's the mechanism we'll use in Zimbabwe. There's a external from the government. There's a trust fund which basically supports scale up of a cash transfer program. So that's the mechanism we're using. So we have developed some ways of working with countries who may not have all of the things in place to be able to manage that themselves.
Okay, let's open it up. I'm going to ask people that you use the microphone and name, self-identify, keep your question short, or comment in the form of a comment or question for the television audience, if you will, okay? So thank you. Please go ahead.
First of all, I thought this was a really...
Sorry, who are you?
I'm Antoine van Akmaal, Garten Roskov.
Father of emerging markets.
Right. So my question... Lars, is, first of all, I think this is a really interesting idea. And I wonder, did you time this with the Pope's visit, as this is really a clear antidote to what the Pope has been saying? This is using traditional capitalist instruments to actually do something about climate change and help countries. But my question was really a follow-up on what Kimberly said. You asked the issue of corruption in the abstract, but in what you have done so far, have you actually run into corruption? Because this must be one of the big potential problems.
Why don't we group a couple questions, and let's do it. Thank you for that. Tony Carroll?
Hi, I'm just wondering about the impact of crowding out the private sector and crop insurance programs. I'm wondering whether or not if you have a risk pool of, say, tobacco farmers or coffee farmers, if they don't necessarily have to bind themselves to some sort of commitment on common pool risk premiums, then they'll say, well, geez, the government will pay us off, so we don't really have any incentive to in ourselves self-insure. So I'm wondering about crowding out the private sector on a crop-specific basis. And I'm on the board of a private equity fund. We organized in Mauritius, and we have had terrific response in Mauritius. So I think there is an African jurisdiction that I think you can find easy to work with.
And I hear it's lovely there in April, so it's great. That's fabulous. And let's get one more. And microphone.
I'm Dan Silverstein. I'm a strategic advisor in the private sector and capital markets issues, and I have exactly the opposite question. I'm wondering if the private sector would not view this as some type of business interruption insurance, since their interest always is to assure delivery of agricultural products, employees showing up on time for work and being able to get to work and things like that. And if they did, you would create some kind of a quasi-public-private entity where they could lay off their risks of credit default swaps and other such vehicles where they had some greater assurance of business stability.
Well, thank you for the questions. I start and Simon can follow in. I think when it comes to Mauritius, we've actually had discussions with them, but they were not really ready. But I personally have discussions with them about that. But I think the whole question of crowding out private sector is a very, very, very interesting. First of all, we have to remember that also the farmers. I remember when I met the leader, what was called when I was at IFC, leader of the farmers union in Malawi, and the first thing he said to me, it says on my card that I'm a labor union leader. I'm not that. I'm a leader of a business association. Every single one of these farmers that I represent are small businessmen and women. And I think that is very important to remember. And I think that is actually a benefit of this whole program that we haven't really talked about, but I think gets into the long-term food security, which is if these farmers know that they actually have some risk or some handling of the risk and some risk mitigation, they would be willing to actually take a little bit higher risk in planting a little bit more, using their land a little bit more, taking a longer term horizon. So I think that is very important, and that actually helping the private sector and the farmers. Secondly, when it comes to actual insurance companies at the local, if you look at the US crop insurance, they have data going back to the 20s per square mile for the whole of Midwest. That type of data just doesn't exist in Africa. And that's why this program, where instead of using local crop historical data, are using satellite and rain technologies, and combining that with seeing, okay, what is happening at the kind of not at the local level and regional levels with the crops. That's where you really start to get something. So I don't think we actually are crowding. We're complementing, and I think one of the benefits of licensing the technology is that hopefully the insurance companies can take some of these and actually start to replace us, because as Simon was saying, what we really want to do is create sustainable systems, and that involves having private sector involved in the long term and having systems that governments can actually pay for. That's the aim we had at IFC, and that's how I believe development should be done. You always need to complement with humanitarian and other aid to start up things, but that's to me is one of the key principles in anything that we do. You want to talk about the corruption a little bit?
Yeah. So on the corruption, the payout audits, the first payout audits on those 3 payouts, Mauritania, Niger, Senegal, are going on right now. The one in Mauritania is pretty much finished. But they are both a process audit to check that they're doing what they said they would do in this contingency plan, and a financial audit as well. There are monitoring and compliance rules at the international organization level, which are set by the Conference of the Parties of the international organization, which is an African Union specialized agency. So there are processes that suspension, et cetera, and we also, beforehand, and we haven't really emphasized this, but beforehand, we have a 12 to 18-month program before the countries can even buy an insurance policy. So we have these very big barriers that the countries have to get over before they can even, pay us money. So we think through, and through that, we're working with them on systems to ensure that the mechanisms that they have in place for financial controls, particularly in the ministries of finance, are still operable, but hopefully can be speeded up a little bit for these rapid response. And that's something we found is not embedded in ministries of finance at all. It's something we're going to have to work on more and more, and hopefully in collaboration with the bank and the World Bank and others, to actually try and enable systems to work more swiftly. It took us a month to get the money from Bermuda into the treasury of Niger, for example, just because they weren't used to receiving those kind of funds from a Bermuda insurance company. And you can think about this and
Sure, it was a
and
Bermuda
laugh about
insurance
it,
company, right?
But we did all of our due diligence, et cetera, from the Bermuda side. But those kind of things are pretty new. So we do have to continue to do work on those. And just if I might, just coming into this crowding out question and the business interruption question, what ARC is providing is business interruption to the governments, effectively. And parametric insurance, this form of insurance where you're using an external measure, rainfall in this case, to find an equivalent of what the impact is going to be without having to measure what actually the impact is very good for that, because it's fairly generalized. You're not exactly sure how you measure business interruption. And that would be very much the way the private sector would be able to use it as well. In terms of crowding out, it's actually the opposite is happening. Insurance penetration outside of South Africa is astonishingly low in Africa. If you look at the GDP growth against insurance penetration and the way that it occurred in the developed world, it isn't happening in Africa in the same way. And so we think that these parametric insurance tools that we're going to be licensing are actually going to be able to enable risk to be underwritten much more easily and much more cost effectively by the international market. So it's actually crowding in the international markets rather than crowding them out.
Great. Let's take a few more questions again, Bundle, right there. It was you, yeah.
Paul Miller, Lutheran World Relief. Thank you, Linda and Dan, as well as your guests. Great discussion. I can't say I was expecting to hear the Pope's encyclical labeled as a poison that needed antidote, but it's a great conversation. Two quick questions. One on the replica insurance, particularly for humanitarian organizations. We work in Niger and Mali, and so I'm interested in if you can give an example exactly how that works, as you mentioned it. And second, I know the State Department has been working with CARICOM on a Caribbean risk insurance facility that ties climate-smart agriculture-type practices to reducing premiums. I think that's how it's supposed to work. Again, I don't quite understand, but I'm just wondering whether your ARC has also considered that the premium paid might be related to actions taken by governments and businesses and smallholder farmers to reduce the risk from flooding or drought.
Great. Other questions? Right here.
It's Leo Martinez from the U.S. Treasury. You mentioned that the G7 has launched this initiative, which of course is very welcome. And it's also an opportunity to try to see what additional resources can be mobilized to strengthen ARC. And I wanted to ask more specifically, what else is needed? What would you be looking the G7 to provide to strengthen this platform, both in terms of money and in terms of data? And money, it seems, you got 200 million in capital. It seems should be enough to get more countries online. where else can money actually make a difference, and what kind of scale are we talking about? And second, on data, which in some ways is the lifeblood of
And you're taking
parametric.
notes on the bill, right? And you're going to send that over to the Congress.
No, I hope you'll do that.
I was.
And in data, are there gaps in the data that need filling? Thank you.
Great. In the corner, yes, right there. Yes, that's in the green shirt, yes.
Thank you very much. My name is Yaya Fanusi. I'm with United States of Africa 2017 Project Task Force. I usually don't ask a question, but I make a statement, and you have liberty to publicly answer or not. Generally, from our perspective of our data, the greatest structural impediment to capital formation and expansion growth is the political division in Africa, meaning too many countries. So we are trying to work to merge them, merger and acquisition sort of formula to create a new sovereign state, which you would also have to do one-shot shopping for your equity and hedge funds. I want you to say whether you agree that the political divisions in Africa is a major structural impediment for what you're trying to do, sustainably and exponentially growth. You don't have to answer. You could just think about it as a way to frame what you're doing in the future. Thank you very much.
Thank you.
Well, first of all, on the number of countries in Africa, I don't think we can do much about it, but what we can do, and that's what I think ARC is about, is to find ways of getting the African countries to work together, and that's what we're doing through our mutual insurance company and the agency. I think that is one thing. When it comes to what are we asking for, you have a little pamphlet that you can get down there, and that has some of the numbers. To continue to develop the support of the countries and the product development, we're actually looking for $66 million. For premium financing, in other words, sharing that cost and accelerating the number of countries coming on board, $50 million. For replica coverage, that's the idea of working together with other institutions. We think if they can come up with $275 million, and that's the number there, and $40 million for developing the extreme climate facility. So these are some initial investments that needs to go into that one. So these are still preliminary numbers that we're working on and developing, and obviously we don't need them and can't handle them on day one. It would be over a number of years up to 2020. So I think that is that. For the other question, maybe you want to talk about the replica.
Yeah. And also just to emphasize, the $275 million for the replica coverage, that would effectively replace and leverage existing humanitarian financial flows. So the idea would be, instead of waiting for ex post appeals process, you would actually pre-fund that. So that's actually, that value is multiple times savings on the overall humanitarian ask of the international community. So the replica coverage, specifically, let's take an example, Niger. WFP have pretty much an ongoing program in Niger. Niger currently pay $3 million of premium and have a coverage of $30 million from ARC. So in the worst case drought, they would get $30 million. And what we would ask WFP to do is pay $3 million in premium as well. They would have exactly the same coverage, and so it would trigger in the same way, and the payout, instead of being 30 million, would be 60 million, and probably initially the additional 30 million would go through WFP channels, but in close coordination with the government. But ultimately, we would like that to boost the government's processes, so that you're bringing the international humanitarian response within this sphere of an improved and built out capacity within the governments themselves. I think it's worth saying that one of the striking early findings for me anyway was the lack of internal capacity for contingency planning within most African governments, not all, but most. The international aid process, the humanitarian response process, largely bypasses those government systems. And there's many reasons for that, but I think if you talk to the humanitarian response community, they understand that gap needs to be closed. And they also understand that the traditional ex-post fundraising is not working anymore. There's been no appeal in the last, I don't know how many years, that's reached what has been asked for. So clearly there needs to be change, and this was certainly the sessions I attended in Addis. This was a major theme of that and will be a major theme of the Humanitarian Summit. And in terms of tying to risk reduction measures, your question about the coast project that your state is working on, we do that through the contingency planning process. And my message would be, don't tie it to the commercial insurance premium. You need to be the market needs to set that premium. If you can do it, if you can create the market efficiently, as we're doing through a mutual insurance company, then those premiums will be very cost efficient. But you don't want to distort those primary premiums by if you can reward through other mechanisms. I think that's good. But I think the tie to contingency planning, which is the basic preparedness mechanism and brings the most bang for the buck, I think that's a pretty good model to start with.
Okay, these two folks. I'm hoping we're going to have some IFC alums here make some comments as well. I'm looking at Georgina Baker back there, but we're going to have, so I'd like to hear from this gentleman, and hopefully from Georgina. Okay, and maybe Mark. Okay, go ahead, sir.
Hi, my name is Daniel. I'm a financial advisor.
Do you come up and use the microphone for our television audience? Just kidding.
Hi, my name is Daniel. I'm a financial advisor. And my question is regarding working with actors or players that will remedy a particular situation after the disaster has taken place. Because oftentimes insurance is not just about paying the cash, it's about making sure that whatever was wrong gets corrected. And particularly in case of let's say, an epidemic, if the government receives the cash and doesn't take appropriate steps, it will just keep on going to other countries. So have you identified NGOs or particular actors, or have you looked at not just beyond dispersing the money, who would actually work to make sure that the problem is corrected? Thank you.
And this gentleman over here had his hand up.
Thank you. My name is Obang Meto, and I would allude to something that Kimberly and Daniel spoke about. I represent a human rights organization, Social Justice, and I didn't hear the word human right when you were talking. In most of the cases in some of these African countries, even now, live alone with that, when they want to invest, or to what they call invest if they are not elected, usually they go and give to those people who are their interests, the people that will support them. So how do you evaluate that? How can you monitor that to make sure that really it doesn't go to the people who are just supporting the government alone? For instance, right now, I don't know if you have heard of it, and I think Kimberly talked about it. There's recently what they call land grabs. And the government are leasing the land to foreigner investors and evicting the local people from their lands. So really the local people are not benefiting. So how do you evaluate this to make sure that it's not doing harm to the peoples who are in that particular area? So the biggest key thing is transparency and accountability doesn't exist in some of these countries. The drought we are talking about sometimes is man-made. So how do you make sure that these things will not do no harm to the people? Thank you.
Okay, Georgina, and then Mark.
Thank you very much. My question revolves around bringing more countries into the program. I think it's very exciting, and I think that many of the institutions such as the World Bank or IFC can assist in trying to bring other countries in. What is holding countries back? Is it they can't pay the premium? Is it that they don't feel they have the issue of drought? Or is it that they don't want to have the oversight on the funds flow after repayment? If you could help bring in other institutions to help you roll out the program, I would be grateful for assistance in what is holding other countries back. Thank you.
Mr. Vlasic.
Thanks so much. Mark Vlasic from Georgetown. My question actually also relates to the sending of funds back. I used to work for the Stolen Asset Recovery Initiative at the World Bank, and one of the things we saw as a challenge there is when there's huge funds going into the country, how does actually the country respond to actually use the money in a meaningful way? And so I'm wanting to know if there's guidance provided so the money doesn't wind up going some other slush fund that may not be as helpful for the people. Thanks.
I think many of the questions were related to how do we distribute the money, and then you got Georgina's question. I think let Simon talk more about it, but I think the key component for us in all of this is that this is a program, and we have the countries and the governments as clients, and they have to. But to be able to become a client, they have to have this plan on how they're going to distribute the money, and we're then following up with audits of what's happening. You know, we are not, at this point in time, and I don't think we should do it, engaging in the structure of the society itself. I mean, whether you got a farmer here or there is not what we are all about. We should try to help the existing structure as much as possible. But Simon can talk more about it. When it comes to the getting new countries in, I think it's a number of things. First of all, as you heard, it's a training period of 12 to 18 months to actually get up and get the plans in order and get, you know, the whole, and that takes some resources, and is a barrier for some. I think also the whole question of that, well, we trust the donors. The donors will come when something really bad happens, so we don't have to care about this, is another one. And then we've seen the just a pure way of, you know, the whole budgeting process. How do we get the premiums into the budget has been a third. And then when I talk to some countries, it's for some of them, drought is not the biggest issue. If you look at Nigeria, that I've had several discussions with, for example, floods. They're saying if you have a flood program, that is one issue. They said the other one is that we're such a big country and we need so much insurance. So your piece is actually just a little puzzle in the system. You need to scale up for us to be able to for it to be interesting for us and worth the energy. So those are some of the comments that I've heard.
Yeah, and just to reinforce that the last point, I mean, ultimately it's premiums. It's finding premiums and generating those flows and embedding them in the government systems because of that moral hazard that if they don't pay the premium, then they know the donors will come eventually. And that's the same with all of these sovereign schemes that I've worked on. Generating the premium is the biggest challenge. But we do put a lot of barriers in place. Most of those barriers are to address this corruption, where do the funds go, political manipulation, et cetera, et cetera. And, you know, as Lars has said, we started out with embedding this institution within the African Union. It's an African-led institution that has 26 member countries as signatories to the treaty that created ARC. And it's led by very strong African leaders. Dr. Nkonjo-Iweala is, I think, pretty well respected, as is Dr. Thunell. And you know, that's not by luck that those influential figures are at the head of these organizations. It is part of the DNA of ARC that addressing these issues of corruption and how the money is spent is absolutely critical for the survival and the well-being of the program. So I think we've done a huge amount of work on it. That work will continue to improve, I think. The contingency plans get certified every 2 years, so they have to come back to the peer review and technical review panel every 2 years. So it's an ongoing process. We respect the AU suspensions, for example. So in Burkina right now, who's a member of the pool, if there were a payout to Burkina that had been triggered, then we wouldn't be making that payout because they're currently suspended from the AU. Hopefully that will pass in the next couple of weeks. But so we are intricately bound into the AU systems as well. And I think, you know, I'm not an expert on this, but certainly from my perspective, those sort of things are being taken more seriously in Africa as we move forward. So we hope that we're addressing those issues. Certainly, if others have good ideas about what more we could do, we're all ears. But it's a very high priority for us to make sure that the payouts are getting to the people who need it in the quickly as possible.
So I saw a hand back.
Can I just,
Yeah.
on that, I think obviously there's going to be cases as we move forward where there is corruption. I mean, we're not naive. But I think what we're trying to do is put in systems so we find it and learn from it and help also to create these sustainable systems so that there will be kind of self-regulated over time. But I think I just have to say that accidents happens all the time.
Hands? Okay, yes, sir. Let me give you the last word, because I know there are going to be a lot of folks who are going to want to speak to both Simon and Lars bilaterally about this, because it's quite interesting.
Okay, then I'll just keep it quick. I'm Matthew Dickert, Forbes CMNS. I spent a lot of time in Bermuda at the beginning of this year, and they're leading reinsurance market, the third largest reinsurance market out there. And I was just wondering if you could speak to some of the work that you're doing with organizations there, like Appleby or ACE or Renaissance Re, in terms of developing insurance-linked securities, particularly in ways that would help support searching for premium generation.
I'll take that. Appleby are our legal counsel, so we're very well linked into that community. The fact is that right now the traditional reinsurance markets are giving us such a good price for the risk that we don't actually need to access the capital markets, and the transaction sizes are a little small right now. The Extreme Climate Facility is geared to be financed through the capital markets, through the ILS markets, and there are actually a couple of ILS markets on our program who are writing it through an insurance front. So we are engaged with those capital markets, and certainly as the program grows, that will be it's a good pricing counterbalance to our traditional reinsurance markets.
Okay, thanks, Kimberly, for co-moderating this with me, and thank you, folks, for coming in. And we wish you luck in getting resources from the G7. I think it's obviously a very interesting innovation. As you can see, folks have voted with their feet to be here. Thanks for being here.
Well, thank you very much for the invitation to come here, and thank you all for listening and discussing with us.